We're getting set to close out a relatively quiet week in FX markets with trading conditions super thin given the U.S. Thanksgiving holiday break and now Friday holiday in Japan. As things stand, what we have seen is risk-off in nature with the major currencies outperforming against commodity bloc FX. Aussie has been hit the hardest in the more actively traded currency space. A lot of this on its strong correlation with China and worry about the China outlook in a world where U.S. protectionism is imposing its will. But Aussie setbacks have been contained to less than 1% lower compared to weekly opening levels, which is better than U.S. equities market that is off about 3.5% since the weekly open. Aussie and other risk-correlated currencies have been saved a bit by this latest wave of broad-based U.S. dollar declines that have been triggered on dovish Fed speak and reports that the Fed is considering a pause. The big news of the week has come from the Brexit front, where Theresa May has managed to work out a deal with the EU in principle. The deal will now need that official stamp of approval, which has kept the pound from a much bigger rally, with traders well aware of the difficulty in being able to push this through UK Parliament. Still, it has taken things in a much better direction than where we were a week ago after Dominic Raab had stepped down and everything was falling apart. The market hasn't been as consumed with the Italian saga, though it's worth noting that the European Commission has called for sanctions, with Italy failing to comply with fiscal rules. Looking at the calendar for Friday, key standouts come in the form of German GDP, Eurozone and German manufacturing PMIs, Canada retail sales and CPI, and U.S. manufacturing data. That's all for now.